Good evening. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for Thursday. And we're at the 13th of January, 2022. We're after 6 p.m. But let's talk about what's going on. It's craziness. You need Prozac to trade these markets. Yeah. You go risk on to risk off like a light switch, back and forth here, as the market's trying to figure out what's really going on with interest rates and the economy. President Biden, another major setback, his mandate on corporations with 100 people, that the people have to be tested and they got to get vaccines and so on. Well, that fell apart, didn't get through. So the only thing to date that the president's had during his presidency, and no matter what he wants to tell you when the State of the Union eventually comes, is he's gotten through one bill, the infrastructure bill that the Republicans were willing to let him go. The filibuster bill, that's a failure. Okay, that isn't going to happen. Mitt Romney's bill that he wanted to put the sanctions on the Nord Stream 2, that failed today as well. So the market's going to take a breather this week and come back, and I think we're going to look fresh come Monday and looking for what trend is really going to set into these markets. We know what the Fed wants to do. We saw Lael Brainerd today be interviewed. She held the road, as she should have, if she wants the job of the vice chair of the Fed. I mean, at the end of the day, she's the number 2 person, not the number 1. She cannot go against the Fed chair. She's got to be backing him up. And their thinking has to be, it can be a little different. Don't get me wrong. She's got to have the ear of him. But it can't be that everything they do is going to be a fight between the two of them. Otherwise, that doesn't work at all. So when we take a look at this, we look at this grayscale Bitcoin. Now, before I do it, I want to remind you, I'm going to drop this. I need to know what you want me to cover next week, because then I'm going to drop each week. I'm going to pick the popular one that I like. I'll take a look at what the market's done, and we'll cover it for 5 days. And I might add this somewhere else as one chart, but I'm not going to rip it apart the way we do to start this off each time. All you need to do on YouTube, that's the ideal place to do it. Write me on that. I review them in the mornings. I make a list, and then I'll make a list, checking it twice, and who's naughty, who's nice, and I'll pick the one that I want from there. All right. Bitcoin is still in a big correction phase. Where it ends, I don't know, but you'd have to be blind not to see that this is going on. The trend keeps making lower highs, lower lows. Today's important. You had a big outside day down. If you take out the high of an outside day down within 2 trading sessions, it's normally a sign the market's about to reverse and go back up to a key moving average. That average would be the 3420 level as of right now. If it drops from here, because all the main averages, I'll come back here, are above the market, that leaves you open for the possibility of getting to the Bollinger Band. Now, there's another number. I don't show it here. That's called a window envelope. Look it up in Investopedia. In the true definition, it's a standard deviation from the 18-day average, and it runs exactly parallel to it, above and below it. I do it different. I use my swing lines and another set of rules I created many years ago to figure out where those go. I like what I do a lot better than the standard way, but I happen to like a lot of the things I do better than the standard ways. If you drop again, wherever that Bollinger Band comes in, expect short covering. That's what I think will happen. I don't have the same belief that you'll run this way as you did before. But when we look at this, how you ran, let's take a look here. On this day, you closed at 31.94. You were not under the Bollinger Band. This day you closed under it at 30.74, and you were about midway in the range. None of these are breakout numbers. You didn't have a breakout there. You'd have to be in the very part bottom of the range, right at the bottom quadrant, 25% of the range, right near the lows, and get another day of doing that after it to say it's a breakout, and that changes the charts even worse to bearish. You didn't get it. So you're getting a bounce, but that's all it is. You can't get too excited about a bounce. It's just a bounce. And the market's not saying it's any good yet. It could come back to 28.72. When you look at the momentum in the market, this is very important. did we stay embedded? You lost it yesterday. Any reading over 21, I don't care if it's only 4/10, means nothing to me. You're over 21. I think that yesterday was the day to come out of the shorts, and today it re-embedded. The only day it can re-embed is the day afterwards, and it did it. So yesterday was a bull trap. Why a bull trap? You knock the bear play out. Normally you follow through to the 18-day average is what I would teach you. And when that doesn't happen and you re-embed, trap-a-roo, that gives all these people that thought they had something, they're caught. Are you going to drop right down to 28.72? You might want to review what I just said. It's fairly important. In Apple, I realize you got the bounce to the 18-day average, but I'm still in the bear camp because I've got, let me come back there, I hit it with my finger wrong. I still have the lower highs now, lower lows. To negate this and get me saying, I like Apple again, you have to take out 177.18. Barring that, lower highs, lower lows, price under the 18-day average, momentum pointing down. No reason for me to think the bull side. XLF, still bullish. Until you lose this embedded reading, I think the pros are buying, but warning sign, why? You have an outside day down. Outside days can be very important. Number one, they could be a catalyst for a market. If you take out today's high, they go right back to the upper Bollinger Band. Number two, if the market has real roll to it, does it pull the red line down? So far not. So on follow through tomorrow, I think you're going to see buying by the pros. And I think they'll bail if the red line closes under 79. Barring that, I expect them to buy on the follow through to the downside to see if they can turn the trend back up. Disney, momentum is down. The trend is down. The only thing that's missing is a close under the 18-day average. If it got that, then I'm going to make an argument. You've opened up the doorway for the possibility of getting the 149.25 until you take out this 158.90 level. FB, the meta platforms, you can see the resistance. I've been telling traders that I think that the pros are selling right at that 18-day average. First, they had to stop over that high. Now it's right here. And yesterday's high in the market was 336.37. So take that out. I'm the first one to tell you now you don't want to be short anymore. But until then, I think the pros are selling that with the goal of trying to get to 321.60. In XLI, the industrial sector, I liked today the PPI number. If you saw the producer price index today, it came out up 0.2%. They were looking up for 0.4. But does this mean that we're first getting our first wobble in prices? One day doesn't make a trend. It just says it's wobbling. We were looking for continued bigger increases. They didn't get there. Now, today's high of 107.44 is over that high. I erred. I should have one arrow pointing up, the other pointing down. My mistake. I see it right there. In XSD, the semiconductors, love it. I was looking for this market to make its run back towards these numbers. Didn't get there. Came down, hit the 100-day, the lower Bollinger Band, bounced, and you're still in a downtrend. So this is one of these markets, and I've told you this over and over. It is a market, regardless of the short sales, I don't want to take them. I like the fact that they have pricing power. Their products are needed. They've got, at least this year, the books are full. People are saying that the shortages are starting to, they see the first crack in them. I love it. We want that, all right? We need to get the products out there. But you're not there yet. So I can see the correction. I'm expecting big-time support, 221.51 to 219.97, and I've made up my mind. I'd just rather not trade it. Fundamentally, I look at a market. I don't invest off fundamentals, by the way. I would never teach to do that. But I do use it and say, maybe I don't want to play the short side. And you're going to say to me, but you're a trader. You can do all that. I know. Don't want to. It's my rules. I'll do what I want. And the home builders, well, you came down for the major support, rallied, and you're failing right against the bare number, the 18-day average. Until that high's taken out now, you've got new downside pressure building, again, back into this number. Take that out and you can lay the groundwork of a bear trap. However, mortgages are now at the highest high they've been in a very long time. Building good prices are going up again. There's a headwind here. Be a bit cautious. The energy sector, I still am bullish as can be, but I realize you've got this up so much, it's going to give you a pullback somewhere along the line. Until the red line closes under 79, if you're going to buy, use a good-sized break to do so. Be out on a reading under 79, and don't be scared of coming in on a deep break and see what the market's made of if it stays embedded. In the gold market, you tell me where you think the market, if it comes up, should fail. First zone it should stop is right here, which is the 18-day average. If it keeps going, the next moving average of importance is the 100. If it keeps going, then you've got a problem at 331.71, which is the upper Bollinger Band. But I'm going to look for it to falter eventually. Well, it started stalling. That's all. Do you want to be short over the 18-day average? No. So if you're thinking of, I should be short up there, no, you shouldn't. Shouldn't be long either. There's really nothing to be done in the gold miners. In gold itself, you hung in beautifully on the first big test of the 100, the 200, and the 18-day average. I'm impressed. The market still has a downtrend, and it's overbought in terms of the swing line and what it's doing. So hands off, but I'm impressed. I like what I'm seeing. You know the market I really like is the gold miners. Not gold, but metal miners. I said gold, that's GLD. This is different. This is right here, the GDX of the miners. In fact, I got those backwards, and I got to flip the charts. I must have done something with them. But the reason I like this, Omicron's going to end sooner rather than later. When it does, factories are going to hum, kids are going to be in school, life's going to try to get back to normal, and we need the materials to make this all happen. It's almost like a war that we've been in for going on 2 years. And as we come out of it, the market's going to say, I need those goods. The supply chain's not full. I need all this. Base metals are going to be part of this. Think of the auto industry when it comes back, what it's going to need. I can go on and on. That's what I think. So, and by the way, there'll be pricing power in it. That's the other neat thing about it. So I wait. I can see that it held the 18-day average. It's not a buy here. It's not a sell. I'm observing. Copper, power, but failure today. Instead of giving you 2 days in a row where this day today could have been up at the top part of the quadrant, it's a miserable failure. You closed in the bottom part. So you're just over the upper Bollinger Band. Let somebody else own it up there. That's what I say. Get a good break. I like it. And what else is about to happen? Well, what's going to happen here? Are you watching the 18-day average in the 200? You're about to get a bullish crossover. TLT. Okay, got to be out of shorts. I can't believe it. I really thought this was going to have legs to it. That shows you, if you think you're wrong, you're embedded. You get a reading over 21, out. It's that simple. I had my clients, I don't mind telling you, short the 5-year futures. I think they lost 2 ticks. That's $60, not a big amount of loss, but wrong. And you don't sit there and say, just against it, it's it. Wrong. Don't want to be short anymore. If it falls, I'll redo. But what if you rally more? You could easily be here into those numbers. So you turn a nothing trade into a loss that now you got to manage. Why do it? It doesn't make sense. So out I go. And yeah, I know we're all thinking higher interest rates. The chart is saying, no, you're going to get a correction here. Next, the euro currency. Could have been a breakout. Look at yesterday. Top part of the range, over the upper band, top quadrant, exactly what we talk about. Did it do it today? Nope. That means it's just another one of these days hanging over it. You're probably going to pull back in it. You're overbought. So now it changed my opinion of the market. It happens that fast, and that's what you look at. Now, I want to be the guy that you go to in the morning and say, bounce my trade idea off Ira. Obviously, I can't handle all the calls. But what I can do is you get my videos. And I start off each day with, and this is Monday through Friday. At about 9 in the morning, I start recording. On Saturdays, I do a weekly video. I can do that on my own time, as you know, but it's only weekly charts for the bigger picture. I do, every now and then we'll mix the weekly and the daily chart. I cover a ton, and you know I'm always rotating what we're covering. You're going to get 24 videos, each about 18 to 20 minutes long, each 30-day period. It's not for a month. They're 30-day periods that we go on, $8.95. So let's see. You're going to pay in round figures, divide 24 into that. You're going to give me in the neighborhood of, I don't know, 70 cents, $1 a day. It's not that. It's 70 cents, 50 cents, right? To see those videos. It's nothing. Give it a try. See if you come up with one idea from what I do. They're not like this. Number one, I'm not in them, so you don't get my beautiful face. But what you do get is a much more serious Ira, one that puts on the rest of the chart tools and drives home ideas. As a subscriber, you can write me direct. When you do, I will answer your questions. If it's a video that I have to make to show you something, I will do it. So you'll get a 1-minute video, whatever it is. That tells such a beautiful story because I can talk and show you what I'm seeing on it. Who else is doing this for $8.95? I don't know anyone. It takes up a big part of my day, but I love it. So do yourself a favor, do me a favor, go to our website under the word research, take a look. I'm Ira. Have a good day.